All right, we're off to the races. U.S. equity markets open like normal despite what is a wintry mix outside. Still, we see stocks little changed. And joining me now as we begin what will be a very busy trading week is Jeffrey Roach. He's chief economist at LPL Financial. Jeffrey, it's great to have you on the show this morning, joining us from Charlotte. I hope you are warm down there amid this winter weather. Let's talk about what's on tap this week from an economic standpoint. What stands out to you?
Well, speaking of warm, the economy is certainly running on the warm side. So I think this week's going to be interesting. It's a follow-up from Davos. I think there were some fundamental changes in the way that the game is played, clearly, with major speeches last week. And I think this week is a continuation of how things are going to shake out for 2026. Expectations here, I think 2026 is going to grow above trend, 2.8% GDP growth. Inflation is actually going to decelerate. And the only way we can actually do that is with robust productivity gains, which we actually saw in the last couple of quarters. And I think that's going to be a major conversation on Wednesday during the Fed press conference.
What does this mean for the Fed's next decision on rates and the path forward for borrowing costs?
Well, we're in this unusual period where I think folks are definitely waiting for how the tariff pass-throughs will impact inflation. And we do expect some hot numbers in the next couple of months. In fact, we did get the latest numbers for October, November last week. I think investors really cheered those numbers because on month to month, both for those months reported, month-on-month change was about 2.2%. And that's okay. It's better than running hotter in the threes and fours. But a 0.1 month on month is where we need to go. And we need a couple of months with that really low run rate in order to pull down the annual rate of core PCE. Again, core PCE is the Fed's preferred measure of inflation. I think in the near term, we're going to see a little bit of those hotter numbers. Hence, that's the reason why some of these markets are really uncertain on where the long-term direction is going to be. My view, personally, I think by the end of the year, we're going to see core PCE closer to 2.5%, but that's a little bit of ways to go because the latest number is 2.8.
We're going to be watching, of course, the inflation data that we get later this week as well, Jeffrey. I do want to ask you about productivity. You referenced it earlier. AI named Times Person of the Year in 2025 remains a big topic of conversation as 2026 gets underway. How does AI factor in to your economic outlook?
Well, certainly one of the strongest drivers of growth that's good for the economy as it relates to inflation and the labor market is productivity, and hence the AI conversations. You know, I think one of the things that was overlooked in the last press conference in December was when reporters really pushed back on the chair saying, hey, look, you revised upward your growth expectations, downward your inflation expectations, and at the same time, you had a rising unemployment rate. What gives? And I think the chair revealed his hand a little bit by saying, well, we are implying a strong productivity framework in order to get that Goldilocks scenario. Interestingly enough, I think the chair does have data to support that thesis. You know, Q3 productivity growth was 4.9%. That's excellent. I think we actually have the setup for that productivity gains to continue, fairly strong gains, so we can actually have above trend growth this year, decelerating inflation, and at the same time, perhaps a few upticks in unemployment. But you have to have productivity growth to make all that happen.
What does this mean for corporate America as we are beginning what will be the busiest week of earnings, with major tech companies set to report like Apple, Meta, and Microsoft, and of course NYSE-listed Caterpillar reporting its quarterly results on Thursday before the open?
Well, I think some of these consumer names are really important to listen to, those earnings calls, because it'll give us a nice look at how the consumer is doing. You know, so far we saw real consumer spending November grow pretty well. within that same report where we get our PCE number, deflator numbers, that's the inflation side, we also get income and spending all within that report that was released late last week. And I think we need to watch carefully this week in any further signs that the consumer perhaps might be feeling under pressure. So far, we're still seeing that K-shaped experience. So your middle upper income consumers are still doing fine, still a lot of real spending. Hence, fourth quarter GDP could come in above 3.5%. That's amazing after a very strong Q3 number. So Q4 is strong, a little bit of uncertainty with the shutdowns there, of course, that happened in the fourth quarter. But so far, the consumer is holding up. That's going to be something I'm watching this week, in addition to how the Fed press conference goes.
All right, Jeffrey Roach, chief economist at LPL Financial. Jeffrey, thank you, as always, for joining.
Thanks.